there, I'm Lisa Doyle with Rockcliff Realtors, and I wanted to bring you basically a first half of 2016, what we might call our state of the real estate market here in the Bay Area, and share with you what's going on in the market. You know, right now we've had a lot of change taking place, and so a lot of questions from our clients about where are we going, what's going on with values, and so I wanted to give you a little bit of data before we talk about, where's the market going. Okay, so a little bit of history on the last cycle of the last few years. So 2011 was the bottom of our real estate market, as all of you know. We had a big reduction in values and we hit bottom end of 11. At that time, the ratio that I like to track is what we call our active and pending ratio. We had at that time in our East Bay 2,400 active listings and only 1,100 pending. So definitely a swing in the negative direction, which of course caused values to drop. When our market started to change, of course, inventory was dropping and sales rising. So, of course, that's supply and demand. At the very peak of our market, which I've tracked so far, January of 2016, in my opinion, looks like it's going to be looked back on as the peak. At that time, we had 400 active listings and over 1,900 pending sales. So 100% flip in where we were at the bottom of the market, of course. So right now, the one thing that I track that gives me an indication of where we're going is, of course, that active and pending ratio. And this will give you guys a clear picture on where we are today. So right now here, July 2016, in our East Bay, which the East Bay, the 680, the 580, and the 24, which is basically our area, 1,386 active listings. So we've gone from 400 to 1,386 since January, and right now 1,176 pending. So what that tells me is we've gone to a little bit more of what we might call a normal market. And so I want to share with you what I mean by normal. A few other statistics that'll help you look at where we are based on where we've come from. Last year, 2015, January through July of 2015, in our East Bay, there were 6,450 homes that were closed. Year to date here this year, 2016, only 4,777. So again, fewer sales and now a rising inventory and lower pending just causes the prices to stabilize. So keep that in mind as we move forward with our state of the market. One other statistic that I want you guys to be aware of is this year in 2016, 830 homes have been on the market, come off the market unsold, and basically what you might call expired or canceled, which means they failed at selling. That's a bigger number than what we've had by 2/3 since last year. So, number to keep in mind when you're planning to sell your home. One other data statistic that I think will help you guys in determining values on where we're going is in July of 2015, in our East Bay, we had 10,513 total closing home sales. July of this year, 2016, so here we are, beginning of August, there were 785 sales. So what does this mean for you guys moving forward? The advice I'm giving all of my clients is what we know about real estate is supply and demand will dramatically affect your values. We have what we would call right now a very normal market. There are 2 months supply of inventory, which means each month in our area, 682 homes on average sell per month. We've got 1,386 homes. So 2 months of inventory, that would be a normal market. A lot of people are in a little bit of state of panic thinking that values are dropping, but really what we've done is stabilize. What I want you guys to do moving forward is just be very aware of what your competition looks like. And you can't do what people have been doing for the last 4 years. Because I have to tell you, this is the first time in 4 years our active is above the pending. You can't price your home with where you think the market is headed. We've got to price your home where it looks today. And so you need a professional to really help you analyze what that means in your specific home in your neighborhood. And of course, if you guys have any questions, you're always welcome to call me. My name is Lisa Doyle, and I'll be sure to keep you guys informed as we move forward, anticipating change in the future. The one thing that I will say that we're likely to see is interest rates are anticipated to rise about 1% later, maybe later this year, early next year. And so far this year in 2016, we've actually gone down 0.5%. So of course that affects values as well. But call me anytime. My name is Lisa Doyle with Rockcliff Realtors, and I look forward to seeing you soon.